So if one of the partners decide to leave the company for good, then they will have to close off all their books, all their old books, and then they will have to open up new books. The same applies. Cynthia, can you please mute yourself? There is a noise on the background.
Okay.
Yeah. Okay. So what happens is that if now a partner also, if a new partner is admitted as well, they will have to close off the old books and then start up new books. So this is exactly what you're going to do today. And like I said, oh, please don't send the link on the group anymore, ne? But it's fine. Okay, so we are going to do now this activity together. And like I said, that you should have it in a separate device because on the screen we are going to do calculations. So I won't be sharing the exercise. I hope you all have it on a separate device. So we can start. It says Galaxy Sports Partnership. So Sarah and Mary are in a partnership, Galaxy Sports, and share profits and losses in the ratio of 3 and 2. So the following is the statement of financial position, therefore admission of a new partner. Okay. Now in this case, what happens is that there was no partner that left the organization, but they admitted a new partner. So in cases like this, they will have to open up new books of the partnership. Okay, so we are given 7 questions that we have to do there. There's someone with noise on the background. I think it's Martha.
Sorry.
Okay, no, it's okay.
It's your movies.
Okay, so the company's name in this case is Galaxy Sports Partnership. And now in this case, you're told that you are required to answer the following 7 questions. So the first question is, calculate the new profit sharing ratios of the partners after the admission of Parker. If A, the share that the new partner will acquire is relinquished by the existing partners according to their existing ratio. So we are required to calculate now the new profit sharing ratios if the old partners are responsible to offer part of their ratio to the new partner. Now, how do we do this? So the first thing that you need to determine, we need to find out their old partners, their old profit sharing ratio. And in this case, you are told that they share profits and losses in the ratio of 3 and 2. So the first thing now, the next thing that you need to do here, you need to put these ratios in fractions. Ne? Remember, we are told that the admission of the new partner, calculating the new profits after the admission of the new partner, we'll have to use, or we'll have to calculate the new profit ratio, profit sharing ratio based on their old profit sharing ratios. So what happens is that the old partners will have to give up part of their ratios to the new partner. So we have Sarah, and in this case, Sarah's old ratio is in this case 3/5. So what does this mean? This simply means that, okay, now you are told that the new partner is to get one third share of the business. So the sharing ratio of now this partner, we are told that the new partner will get one third of the profits and losses. Now this one third will be distributed or will be taken from the existing partners ratios. So one third of Sarah's 3.5 will be taken away, and also one third of Mary's profit sharing ratio will be taken away to the new partner. So this will have to be 3/5. You multiply it with 1/3. So 1/3 of 3/5 will give us how much? You can calculate that. How much will you get?
1/5.
So we'll get 1/5. Ne? Or in other words, it can be 20% because 1/5 is the same as 20%. Are we together? Do we understand so far?
Yes.
Okay. And then we move on. So this simply means that Sarah will give 1/5 to the new partner, who is Parker, and Mary. So let's see how much Mary will give. So Mary has 2/5. Now, where did I get the 5 from that I'm using 3/5 and 2/5? I actually forgot to explain that. So we are told that the ratio is 3:2. 3:2. That was their old profit sharing ratio, 3:2. So now how do we get the 5? The 5 is actually the total of the two ratios, or the total of the two numbers, which is 3 plus 2 will give you 5. Ne? So that's how we got the 5, and that's how you always calculate if you want to change or if you want to put your ratios into fractions. So it will be now the ratio over the total of the two ratios, or both the two ratios, or three ratios, or whatever amount of ratios you are given. Okay, so we are busy with Mary. Now in this case, Mary's ratio, old ratio was 2/5. Ne? And we are told that Mary should also give 1/3 of his ratio to Parker. So 2/5 times 1/3 will give us how much? Anyone to quickly calculate that?
2/15. 2/15.
18/100.
2/15. I'm actually getting
18/100.
Yeah. How did you get the 2/15?
Yeah.
I said 2/5 times 1/3.
Oh,
What type of calculator are you using? Casio or Sharp?
Casio, yeah.
Casio. Okay, I'm
Casio.
not really familiar with the Casio. I usually use the Sharp, so I can't even. I'm not even able to explain how you need to do it. But
I also got 2/15.
2/15.
Yeah.
Yes, I also got 2/15.
Okay.
I'm using Casio.
Ooh. How about okay, do this. Take first do 2 divided by 5. You get the answer. 1 divided by 3, you get the answer. Then you multiply the two answers, I think. Then you change it into fractions or.
Okay.
2 divided by 5 times 1 divided by 3.
I think here we are using the LCM, lowest
What
common.
is the answer that you got?
Where's my pen?
Yes,
There was someone saying something.
I was asking what was the answer that you got?
13 over 100.
And you just press it into the calculator like that.
Yeah, like I'm using a sharp.
If in the calculator it's simplified.
Uh-huh.
So when we punch in, they're giving us
Can you try putting if you try putting that into percentages, how much will you get? The answer that you got.
13.3.
13.3. 13.3, right? Then it's correct because
Yeah.
the percentage should be 13.
Okay.
Yes.
I think on the question, for you to get 1.1 over 5, let me give you an example of Sarah. 3 over 5 times 1 over 3. You get 3 over 15. I think the way you must punch it on the Casio calculator, you need to do 3 over like 3 out of 15. You know the sign, the ABC thing sign. You need to punch it in 3 over 15. Then you get an answer 1 over 5 on our Casio.
Is everyone getting that?
15.
Over like out of on the calculator, on the Casio calculator, you need to do 3 over 15, then you get 1 over 5. I would divide.
I
that.
mean,
Are you
I
guys
got
getting that? Because I'm really not familiar
no.
with the Casio at all.
But for Sarah, I got 1 over 5, but I just punched it straight. 3 over 5 times 1 over 3, then I just got 1 over 5. But with Mary, I'm getting 2 over 15.
Also me, I'm getting 2 over 15, like
Using the same
the same,
method, yeah.
Okay, let me quickly just help me your Casio calculator quickly. So I try using it. So you said you're getting 2 over 15. Which is still the same thing, because if you change it into fractions, it will give you the same. It will give you the same percentages.
Let me see.
Which is still 13.3% or just 13% because 3 is less than 5. Can you just multiply your answer by 100, the one that you got? Are you not getting 13 point?
Yeah, 13.3.
13.3, right? And if you are to round off the 13.3, it will still be 13 because 3 is less than 5.
13%, yeah.
Yeah.
Yeah. So can we move on now?
Yeah, we can. So you said you guys are getting what? How much?
Over 15.
over 15.
2 over 15. So let's use the amount that you're getting so that you don't get confused when you're going to do revision. Okay. And then now that means that, okay, this 1 over 5 will equals to 20%. 20%. And then the 2 over 5 equals to 13%. Ne? So what does this mean? It simply means that Sarah will give off her 20% of her sharing rate of her ratio, and Mary will give 13% of her ratio to the new partner, which is Parker. Are we together?
Yes.
Okay. So in this case, now we are told to calculate the new profit sharing ratio. Now you can already tell, okay, Paka already in this case has how many percentage of profit of profit sharing ratio is he having? Maybe we can start with Parker. You already told that,
33.
okay, Sarah gave Parker 20%, and then Mary gave him how many percent? 13%. Do you understand?
Mhm.
So in this case, he has 33%. Ne? So Parker will be giving 33% of the profits of the whole of the business. Okay, so let's move on to Sarah. Now in this case, if Sarah was having 3/5 and he gave away 1/3, are we together? How much will he be? How much will she be having? What will be her new profit sharing ratio? Now in this case, it's advisable that we use percentages, especially that when it comes to what? To fractions, it can be very difficult. It can confuse you when you're subtracting and adding and so on. So if we can change our fractions into percentages, then it becomes easier for us to do our adding and subtracting calculations. So first, now you need to change Sarah's old ratio, Sarah's old profit sharing ratio into percentages, and then you subtract the percentage, the total percentage she gave away to Parker. So 3/5 equals to how many percentage? I hope we all know how to change from fractions to percentages.
6.
It will be
60%.
60%, eh? 3/5. So
Yeah.
3/5 multiplied by 100
100.
will give us 60%. Ne? And then how many percentage did she give away to the new partner?
20.
She gave away 20. So we'll have minus 20% in this case. Minus 20%. Close the door. So we are left with how much? So Sarah's new profit sharing ratio will be how much? Or her new percentage will be how much?
40.
40%.
So she's left with 40%. So Sarah will be getting 40% of the company's profits and losses. And then we move on. And then we move on to Mary. Mary gave away 13%. So the first thing that you need to do is we need to change Mary's old ratio to percentages, so it becomes easier for us to subtract. So what is Mary's percentage, old percentage?
27. No, old.
Is it not 40%?
Huh?
Mary's what? Mary's what?
Mary?
Initial old ratio.
Mary's old sharing ratio is how much? It was 2/5. Ne? So 2/5 multiplied by 100 will give us 40%, right?
40. 40%.
So 40%. And then you minus the 13% that she gave away. So she gave away 13% to a new partner. Oops. How much will she be left with? What will be her new profit sharing ratio?
27.
So she's only left with 27, meaning that she'll be getting 27% of the company's or of the partnership's profit and losses. Now, how will you know that you're correct? Usually, it's very important that your new profit sharing ratios should always be equal to 100. Are we together? So if your new
Yes, we are.
the same way the old percentages were out of 100, because 60 plus 40 will give you 100. They say that should be the same to the new ratios, that they should be out of 100. So 33 plus 40 plus 27 gives you 100. Guys, it's nice on the background. Okay, thank you. So if
Okay,
you happen, there's someone with a question.
sorry, yeah, I want to ask.
Yes,
Now,
Lily?
what will be the the new profit sharing ratio like in fractions?
In fractions, you just change these percentages into fractions. So 33 divided by 100 will give us how much?
0.33.
No, it should be in fractions. 0.
Oh, okay.
It gives us 33 over 100.
So that is 33 divided by 100. So we get 0.33. 944. Sorry.
Yes.
0.4. So what you're asking is that you want like to give your answers in the ratio format, or what exactly? Because this is also fine.
No, like maybe in ratio forms.
In
Ratios
on
like
the background, guys.
just
Yeah,
Okay.
this noise. Maybe she
I
moved.
was saying
Yeah, guys,
I
if you
I was saying that I want
yes,
I was saying that like I want to give my answers in ratio like just the same as they gave us at the beginning.
you want to give your answers in ratios the same way it gave you at the beginning.
Yeah.
You see, okay. So the first thing, you have 33 divided by 100. That is 0.33. Hold on. And then you have 40 over 100. There is 2 over 5. Okay, not really sure with this 33% will make it possible for us though. So this one, at least this one is 2 over 5. And then 27 divided by 100. Yeah. So if you like to change this into ratios, it won't be possible because they don't have the same denominator. If you change them to fractions, they won't give you the same denominator.
Yes, it's true. They don't have the same denominators.
You can only put them in ratios if they have the same denominators. Am I making sense?
Yes,
Yeah, thank you.
Okay.
Yes.
but we will still arrive at the same answer if we minus the sacrificing ratio from the old one.
If we do what?
if for instance, like when 1/3 of Sarah's portion is given to Parker, what if we say 3/5 minus 1/5?
Yeah, that you will get 1/5, but that only depends if you're really good at math, ne? Because sometimes on a calculator, it also depends on how you press on your calculator, because you can get wrong answers. So let's try doing it with a calculator, but if you do it manually, like how we subtract and add fractions, then you can get 1/5. Straightforward. I mean, you can get 1/5. Sorry, you can get the new profit sharing ratio straightforward. However, if you do it on a calculator, you can get wrong answers from the calculator. Especially, it requires you to use brackets and so on. Do you understand?
Yes.
Okay, but we can always try it out. So you are saying that we take 3/5 minus 1/3 or what? Or 3/5 minus
1/5.
or minus 1/5. So let's try it with a calculator. Let me try it on my sharp calculator.
It will give us 4/15.
Minus 1/5. 2/5, and then you multiply by 100. It actually gave me the correct answer. How? You should put, you make sure that you put your fractions into between brackets. So the first ratio is 3/5, ne? So you open bracket 3/5, you close the bracket, and then you minus, open the bracket, 1/5, and then you close the bracket. But if you just put them in the same bracket, then you won't get the same answer. It will be wrong. Do we understand?
Yes.
So yes, it's possible to do it straightforward on the calculator, but you must be very careful. You should always use brackets. Otherwise, your answer will be totally wrong. Like the one one of you got, that is wrong. Okay, so can we move on? Actually, this meeting is limited. It's limited to 40 minutes. So I think we only have 6 minutes now. So what happens is that once the meeting ends itself, I will restart and then you can join, then we continue.
All right.
So let's continue. Let's move on to the second. These kind of questions are very important because they usually come in the examination where you'll be required to calculate the new profit sharing ratio. So they are very important. Okay, so let's move on to the second. The second question requires us to prepare the journal entries to record the revaluation of the assets at admission. Revaluation of the assets at admission. So usually, what I usually advise students to do is, so there are 2 ways to do this. You can actually, if you're really good, you can just start. You can already just start journalizing now the entries. However, if you feel like you can get confused, you can first draw up a revaluation table. Ne? So you can actually start draw up a revaluation ledger account. Then you do all your revaluations, and then that's when you you transfer to your journal. So what do you guys prefer? Should we draw the
I think we should do the
table?
revaluation account first.
Okay.
Let's do the revaluation.
Because sometimes you can be even asked to draw up a revaluation account.
Let's start with that one.
So revaluation account. Okay, we have 4 minutes, I think. Okay, so to just throw it up. So we have a debit side. And then I hope we all understood the first question. Please don't let me move to the next question if you still have questions.
I think the first question was clear.
Okay. Yes. Someone has a question? Oh, okay. Okay, now revaluation, this is actually just a temporary account. So it's not a fixed account, or it's not a normal account like other accounts. This is actually just a temporary account that is drawn up to used to revalue our assets in cases where we are liquidating a company. Usually it's used for when it's used to revalue assets when we are liquidating, when, in other words, when we are ending our company. But when it comes to partnership, it's used to when we are admitting a new partner, when a partner is resigning, or when we are liquidating our partnership. And remember, those are the 3 things that we need to do. You should know the accounting records of partnership in general, what we did, I think, a week ago or 2 weeks ago. You should know the accounting records of admission of a partner. You should know of resignation of a partner, and also of liquidating a partnership. So those are the 3 things that you need to know. And they both, those 3 things require, or the 4 things, I mean, require you to draw up a revaluation account. So what is the information telling us here? We are given a statement of financial position as at 31st December 2017. And then we are also given some additional information where we are told that the following values are placed on the assets and liabilities. So the first thing that you need to see, you need to identify whether there was an increase or on the revaluation, or there was a decrease, or it was there a surplus of a revaluation, or was it a deficit. So if you check at the land and building, the land and building was valued at only 570, at only 570. And then it was changed, or it was revalued to 700,000. Are we together? So did we make a surplus or a deficit? Was it a profit on a revaluation or a loss on a revaluation? Comparing these 2 amounts.
It was a
Profit.
I think it was a profit.
It was a profit because why? Our land and building was only valued at 570, and then after we revalued it, it's now valued at 700,000. So we made a profit on revaluation, or a surplus on revaluation. So that difference, that profit, is what we are going to share among the partners. Are we together? And if it's a profit, on which side do we record it? On the partner, on the capital account of the partner?
Debit side.
Of the capital account.
On the what?
Profit.
On the capital account of the
capital
partner.
is